You log into your bank app and see a static balance. But while those numbers stay the same, inflation is silently eroding the actual purchasing power of every dollar in that account. This chart tracks a $10,000 deposit over time. While annual inflation historically hovers around 3%, traditional retail banks pay a microscopic 0.01% APY. The red line shows your actual purchasing power dropping sharply, while your interest earned barely registers above the baseline. This massive gap between interest and inflation allows retail banks to utilize consumer savings as an extremely low-cost fuel for their corporate operations. Keeping liquid cash in a legacy checking account results in a guaranteed mathematical loss. It effectively turns the depositor into a source of nearly free capital for the institution. The primary engine driving those corporate profits is a mechanism called interest rate arbitrage. It is the first major pillar of bank wealth extraction. When you hand over your hard-earned cash, the bank does not lock it away for safekeeping behind heavy vault doors. That archaic illusion of secure storage hides the reality. Your deposit is immediately put to work. The exact same hundreds you deposited are aggressively pushed right back out the door. The bank lends your money to other consumers for credit cards, auto loans, and mortgages. Look at this digital scale. On one side, banks charge borrowers 7 to 25% interest. On the other side, they pay you a 0.01% yield. This vast gap is pure, risk-free profit for the institution, generating massive returns entirely on your money. In this one-sided equation, the house wins every single time. The wealth-building potential of your cash is systematically transferred straight from your pocket into the bank's bottom line. Passive extraction through low yields is only half the strategy. Banks also rely on an active, highly aggressive second profit pillar, a mining field of hidden penalty fees designed to target lower balances. This timeline illustrates overdraft engineering. Historically, banks reordered daily transactions, pushing large charges through before deposits cleared. By rearranging these red blocks, they trigger multiple $35 penalties on a single paycheck. This extracts over $10 billion annually from financially vulnerable consumers. The root cause driving both these predatory fees and low yields is massive physical overhead. Grand Corinthian columns and expensive downtown real estate cost an absolute fortune to maintain. To pay for luxury corporate offices and a bloated legacy teller model, the bank has to find the money somewhere. They do it by shortchanging your interest rates and enforcing strict account minimums just to keep their lights on. Depositors effectively pay a structural tax to maintain these physical locations, propping up an expensive brick-and-mortar business model that no longer provides them a competitive return. You can bypass this legacy infrastructure entirely. The modern alternative relies on digital-only financial institutions and high-yield savings accounts. As this infographic shows, digital platforms completely eliminate the expensive overhead of physical branches. Because they aren't paying for marble columns, they pass those savings directly back to you, offering yields over 400 times higher than legacy banks while maintaining the exact same official FDIC insurance. Escaping the legacy trap takes about 30 minutes if you follow a specific sequence to restructure your liquid cash. First, move your emergency fund out of your 0% brick-and-mortar account and directly into a high-yield savings account. This actively halts the daily decay of inflation. Next, secure a fee-free digital checking account for your daily spending. Then, strictly separate your transactional cash flow from your long-term savings, making accidental overdrafts mathematically impossible. Achieving financial sovereignty means actively rejecting the complacency that legacy banks rely on. By optimizing your accounts for maximum yield, you stop funding their massive overhead and take back total control of your personal wealth.